My friends, welcome back to the channel. Going to do a quick little one of my Tuesday, Thursday updates that I always try to do on the YouTube channel. If you're a longtime follower, first and foremost, thank you. If you're new to the channel, I appreciate you. Please do the like and subscribe, comment, all that good stuff if you have any questions. If you haven't done so already, please follow me on Twitter. Colin_Gladman is going to always be the easiest way to keep up with all the charts that I'm looking at, intraday thoughts. If any big news comes out, anything along those lines, it's going to be where I'm going to be the most active. Like I said, always posting as many chart ideas as I can, as many good setups as I can. You guys know the deal. Nothing in this video is financial advice. I always want everybody, whether you follow me on Twitter, whether you know me in reality, whether you're in my Discord, I want everybody to trade their plan. I want you to do what's best for you. Don't just go with whatever Twitter sentiment is, or even your Discord or anything like that. Really dive into the education, read, watch YouTube videos. Just learn as much as you possibly can. That way you can make awesome informed decisions for yourself. For instance, like heading into this week, there was a ton of bullish sentiment on as far as like Delta buybacks and things of that nature going into today. And my personal read was pretty bearish for today. It turned out to honestly even play out better than I thought that it would, to be perfectly honest. But I got a bunch of SPY puts right before close, and SPY pretty much just melted all day today. So like I said, just when you have information and you understand the technical levels and what to look for and patterns and volumes, you can just the picture becomes clearer. It's like I always tell my Discord, everything's like a little bit of a piece of the puzzle, and the more pieces of the puzzle that you have when you start putting together, the clearer the picture becomes. That way you can really identify your edge in the market. So having said that, most of this video I really just kind of want to focus on SPY, and I also want to look at AMC. So AMC was up like almost 17% today. It was up exactly 16.41%, while SPY was down over 2%. So obviously a ton of strength. We've got AMC earnings coming up, so I'll kind of look a little bit more macro picture, a little bit more micro picture of what I'm looking for AMC, and once again the overall market. So SPY, let's start with that. Just really at crucial spots for bulls to step in and kind of retake control of this deal. So obviously they've been in control. It's been a bear market, but the bulls have been in control pretty much since those October lows, constantly making a series of higher highs and higher lows. Now what we're going to be looking for is this a start of another push down, or is this just a small correction up until, and then we push to higher highs again. So like I said, making a lower low, then pushing up towards higher highs. So once again, nothing goes straight up or straight down, so there's always going to be corrective moments. However, we're pretty much at this long-term bearish trend, which we've gotten all those rejection points that everybody's been paying attention to. Now we've broken above it. I posted this look on Twitter of kind of this rising wedge look, and honestly, I'm not in love with it. I definitely love the support. There's no doubt about the support area. Don't love this trend line. I'm not in love with it. Definitely got a lot of solid touch points, but I'm not just going, oh, this is definitely a rising wedge. I just think it's definitely giving me rising wedge vibes, especially when you kind of look at the overall volume. Hasn't necessarily been tailing just completely off, but anytime you've got rising price and falling volume, it's always a little bit of a red flag. Now, some of this volume up in here, you can still see, some of it was above average, especially even back here what we saw in the summer rally, but it's just kind of a look that kind of really stood out to me whenever I was charting today and gonna kind of pay attention to. Kind of another few areas of confluence, if you will. So you've got the 921 EMA cross down that looks like it could happen as soon as tomorrow, if not the rest of the week, especially if this week bleeds really hard. You get another strong push down tomorrow, you're gonna see that 921 cross down. The volume today, it was, I would say, average to a slightly above average. However, you got that gap down, really didn't see much upside at all, and pretty much just got pressed down all day today, and closed pretty close to the lows of the day. So that's always pretty much just a bears are in control of this deal. So what you want to see though is you're coming up to this rising support, plus coming down here and retesting this bear trend line. Also too, from just a, you've got the 50-day simple moving average is going to be right here, this green line. Also too, from a fib standpoint, you've got the 0.5 fib that is going to be right around 396.50. So there's, just as bad as this looks, there's also several areas of value or levels of confluence, however you want to look at it, to being able to see a bullish continuation to the upside. And just like in these rising wedges, you can have sort of false breakouts to the upside. You can also have a sort of false breakout, or breakdown to the downside. So I don't think there's any doubt that we've been in a correction essentially of, and let me just show you what this would look like. That we're basically have been in an ABC DE correction. So now it's just where's the next move, right? Are we going to impulse to the upside, or are we going to impulse to the downside? So to me, what we've been doing is very corrective, which isn't really necessarily bullish or bearish, but we definitely want to, from a bullish standpoint, you definitely want this rising support to hold right here and start curling back up. And then of course, if you lean more towards the bearish side, think we're gonna see another leg down, then you want another push to the downside. My personal opinion of the deal is I feel like the market is very disconnected from reality. I think there's a lot more reasons to be bearish. Okay, you know what? You want to kind of go down here to the hourly and kind of see where this gap up happened, and then once it gapped down where it got rejected. I do kind of like this top trend line more. So, and who knows? Maybe I'm feeding my bias, because once again, my bias is that there needs to be more downside. My personal opinion is the economy as in shambles, and honestly, I think it could get worse. When you look at housing defaults rising, you look at how much consumer credit card debt is out there. Interest rates are going to stay high. The Fed's already talking about possibly going back to 50-point hikes. They haven't confirmed that. Be interesting to see, which, by the way, reminds me, the Fed minutes are tomorrow at 2 o'clock in the afternoon. So be ready. Be nimble. If you've got any open positions, you're going to see some volatility when those minutes get released. And honestly, I will be a little bit more concerned if on SPY, if you don't really see the bulls, come down here, if we bounce, if you don't really see us bounce hard, if it just kind of comes down and maybe it even gaps down in the morning a little bit, and then it just kind of creeps along this line all day up until the Fed minutes, obviously it's not going to drop that far, but that's being a little dramatic. But that would, if it's just kind of a slow gap down and then a slow steady climb into the Fed minutes being released tomorrow, is going to make me, just more, it would make me more bearish than bullish. Also too, if you come over here and you look at both the 2 and the 10-year bonds, so the 10-year is going to be over here on your right. You basically have this falling wedge that double bottomed right on the 200 SMA, the simple moving average, and then now is pushing up towards the upside. On the 2-year, you've got this wedge breakout, and it's running into resistance essentially right now. But if you get a strong push to the upside here, that's going to be bad for equities as a whole. Also, keep an eye on the dollar. So like QQQ, I'll get to the dollar in just a second, but like QQQ, this is what I was watching. So this push up right here that offered support. Let me zoom in here a little bit more so you can see. So you can see this previous high, it was able to mount on top of that previous high at basically 297 before pushing back up. But you can see that the volume is weaker on these push-ups down here, so that is a clear signal of distribution as far as I'm concerned. So also too, you can see it on SPY that you've kind of got the same thing going on, volume slowly dying off. I'm telling you, if we do like come down here and get a bounce here, you start pushing back up to that 418, 420, and the volume is way down here on that push up, that's going to be a load to put zone. I mean, you do what's best for you. That's what I would be doing. So like I said, bonds still look relatively strong to me. Let's pull up the dollar. So I had it in this channel, and I'm pretty sure I tweeted out, are we about to double top or start to push to new highs? Obviously, you got a push to new highs as of right now. So we're on the hourly. Let's kind of look at the daily. Yeah, so you're definitely going to want to clear this 104 to basically 105 range. You know, you start getting on top of that, and that's going to show a lot of strength. We start getting, you know, start curling back up here. I mean, look at that right there. You essentially got yourself basically what could be a perfect double bottom before pushing back to the upside. But decent amount of resistance, like I said, in this kind of 104, 105 area. So, but overall, like I said, still kind of looks strong. Last but not least, AMC. So this was my intraday look. Kind of same thing. You had the initial gap up and push. Pre-market was really strong, and then you got a real weak volume sell-off. Then you pushed up to new highs, and this was the look that I tweeted out as far as the falling wedge. You had the volume falling off, which is exactly what you want to see. I was kind of hoping it was going to stay right here in this first, push up highs. So I was going to kind of hope it was staying in this 575 range. Actually dipped down to about 560 before pushing back up to high of the day. So that's what I was talking about. I was hoping it was going to come down here, push up to high of the day, and honestly even finish a little bit higher, maybe up in that like 630 to 640 region, but we didn't. We pretty much got right at the high of the day. So going forward, let's get out here to the hourly. So going forward, I want to talk about this head and shoulders here that I tweeted about. If we push up here to this 650, especially tomorrow, maybe even the next day, especially if like the market overall recovers, and if we push up here and this volume is really, really weak, really want you guys to be careful about a potential rollover. And it doesn't necessarily mean that like the head and shoulders will completely play out. So like a head and shoulders, you got your shoulder, you got your head, you got your shoulder, you got your neckline, and typically the price target is going to be the length of the head. But as you can see, that would pull AMC down here to like the twos potentially. So I don't necessarily think that that's going to happen. But you could at least see a kickoff here and then coming down here and then see another, bounce back up at that point in time. I already kind of said that I think the neckline is a little wonky right here. You would have liked to have seen that stay kind of in that 480 range, but it's definitely a possibility. If we do come out here to like the daily and take a look at it, then also too the volume is not necessarily what you'd want to see. So what you want to see on a volume on head and shoulders is the initial push up. You have an increase in volume, which you have, and then the second push up would actually be a little bit weaker volume, which you can see was pretty much the same. And then the third push up would be the weakest volume, which obviously we had a decent 73 million shares traded today. So the volume doesn't look great. The neckline is a little wonky, but everything doesn't have to be, textbook to play out. So just be cautious of that, especially like if you're in any options. And then of course, something crazy happens if AMC gets halted, then, you know what that means when AMC gets halted. As far as resistance that I'm looking at going forward, so we've got the 0.5 fib, which is also where it got halted last time, was right in here. We've got the 200 moving average right here, which is where it got halted back over in here, right? Well, it's a common theme, right? There's halt on AMC. If you follow me on Twitter, you know how I feel about halt on AMC. So bullish is going to be getting above right here in this $7 range, and then kind of mountain this high, before a continued push up. That's going to be your ultimate bullish case scenario. Do I think that's going to happen leading into earnings? No, I don't think that's going to happen. So that would be my least likely scenario. Maybe you get on top of the 650, start pushing up to 7. Full disclosure, I have $7 calls right now. I already took profits on 50% of my position, both at 25% and 40%, and I'll stop out the rest if they come back to even, because I'm a profit taker. I already put on Twitter my feelings. Please follow me there or go check it out if you want. My thoughts as far as the reverse split goes. My thought is it's going to happen. If it doesn't happen this time, they're going to keep diluting ape until it does happen. So you can either vote yes now, or you can vote yes when it doesn't matter what you vote, because the vote is going to be locked up. So, and AMC needs capital. It's burning a ton of cash. So good news is a lot of good movie releases. Go see Ant-Man. I really enjoyed it. I don't get the hate for it, but yeah, we'll leave it at that. Okay, so we got to get over 650. Then we want to get over like 725, 200 moving average. So like I said, a lot of resistance above us. This whole area, where we were in this bull flag back here, and then we got the breakout and then the halt. That's all going to provide, resistance the next time we come up, pretty much like it already has. I would be surprised just to blast through it, but, all things are possible with volume. Like I said, a lot of $7 and $10 calls have been coming in for those, March expirations. So who knows? We'll wait and see. But yeah, it's just, like I said, if you weren't looking at this as the dollar, you'd be like, you got a clear double bottom, you got a daily 921 cross up, pretty much just riding this 9 on a daily basis, and it's just going to slowly keep on going. So I just don't like the look of equities right now overall. I think there's more downside. Last little quick shot of Tesla in this rising wedge right here. Full disclosure, I do have puts. Been tracking this rising wedge and finally got the breakout and the push down. And as you can see down here, volume's weak overall, but it is increasing as it's starting to push down. Main level I was looking to get below and close below today was that kind of 197, 50 range, which just barely closed below it. So still got some puts going on in here. This 0.5 area, to me, this once again, clear signs of distribution. So you got your initial push up, then you got a push up again. Look at the volume difference. Volume is like half of the first push up, and then now it got even weaker today. The push up right off the bat this morning couldn't even get an hourly close above that 0.5 before just pushing down the rest of the day. So that's kind of what I'm looking for. So SPY tomorrow. Those downside targets, once again, the data of the Fed minutes coming out is going to be, a problem. But I mean, 396 range, 100% not off that table. We want to see what it looks like dealing with this. The biggest watch for me is going to be this support trend. Can that hold? If it just opens tomorrow, something crazy is going on. Gaps down below or anything like that. And then of course we've got all the what's going on with, Putin and Biden and Russia and Ukraine and all that good stuff. So potential catalyst could be coming overnight. But trade your plan. Do what's best for you. I hope this video was helpful to you. Once again, please like and subscribe. If you want to join the Discord, link will be in the description. And until Thursday, much love, my friends. Trade your plan. I hope you have a wonderful week. I'll see you guys on Thursday.